All right, premium members, welcome to the second episode of the core material, volume 2. I don't really know what to call the thing with the volume. Someone said something about volume 1 to me, and it's totally thrown me off. This is the second lesson in the core material. The first lesson was candlestick structure. If you haven't watched that yet, stop right now. Stop the video this instant and go watch that. And then come back to this. And you can navigate to the core content tab to find that video. It'll be right above this one in that channel. So let's just hop right into it. First, a quick little recap to make sure that you did in fact understand candlestick structure. So I'm going to mark out these highs and lows right here. And if you don't understand them, if you don't understand the highs and lows, okay, based on candlestick structure, I'm not going to explain why you don't understand them in this video. You're going to just have self-accountability. You're going to realize, I don't understand this, and you're going to leave and go watch that video again until you understand it, okay? Got a high, low, high, low, high, low, high, low, high, low, go ahead and cover this one out, high, low, high, low, high, low, high, low, high up here, okay? So as far as candlestick structure goes, here are highs and lows. Now, over this, I'm going to put structure, and it might confuse you for a second, but we're going to talk about it. Actually, let's pretend I started back here, okay? And we're starting with structure. Okay, now I'm going to delete the candlestick structure because it's not important when identifying total overall market structure. It's only important for identifying, remember, external highs or external lows in trend. And boom, now we've gotten rid of it. Why is this randomly right here? Because prior to going and closing above this or below this, we wick higher. So I just go ahead and cover it out like that. This wick right here as part of my swing. But realistically, if you're looking for a swing closure to go higher, you would want a swing closure above this, not above this. But we just go ahead and mark this high out for ease of use. So let's get into why I'm marking these and not the other things. Because the other things, you have to learn to forget about them completely unless they are part of the trend, and they're in a bullish trend, it's external highs, and in a bearish trend, it's external lows. So let's start with a little example right here. So currently, you're just gonna have to trust me on this. We are trending up. This is the 2-hour time frame, and this is from November, okay? So don't need to worry about this right now. This has nothing to do with current day analysis. This is just trending up right here. So what we're doing is, since we're trending up, we're on a bullish trend, we're looking for an external high, meaning we are using candlestick structure to identify the first high that we see after a protected low is formed. So a protected low would be formed somewhere down below here, and now we're looking to identify a external high using candlestick structure. So what we're going to do is we're going to look using candlestick structure from the video before. Did we close above this bullish candle with this little bullish candle? No, we did not. So we need a closure below here. We did not get a closure below that, so this is not a high. So now we're looking a little bit further. Did we close below this? No. Did we close above it? Yes. Closed above it with this candle, right? We've got multiple candles closing above it. So because we have candles closing above it, we can now disregard looking for closure below this, and we can begin to look for closure below these candles right here, these two. Whichever one closed above. It looks like this one barely closed above by a tick. So just for being conservative with our analysis, we'll go ahead and look for a closure below this, all right? So when we get a closure below this, we know that we have a high. Now we're gonna go ahead and cover everything that happened from here, or not here, so from the protected low and the highest point that happened before we validated the high. And that is this right here. So here is our high. Why is this a high? Because prior to us closing below this candle and validating this as a high, right? Validating this candle as a high, we wick higher. So we're gonna go ahead and cover it out. So pretend you've got your low coming from way over here, and now we have a high. Now, how do we identify a low? Is it when we come down and then close above this candle here? That's what I taught you in candlestick structure. That is 100%, 1,000%, 1,000,000% incorrect, and you have to get it out of your head. Please never think about it again. When you're in a bullish trend and when you're talking about identifying lows, when we're identifying lows, there is one single factor. That is, once you form your external high, okay? Once you form your external high and you have validated it using candlestick structure, it's the first valid high that gets created after a protected low. A low is defined as the lowest point that price travels to prior to going and closing above the external high, okay? So this does not become a low. This does not become a low here. Forget about it. If you consider this a low when it's here, you're gonna get dogpiled. You're gonna get destroyed. You are going to, the market is gonna wipe the floor with you because you are using structure incorrectly. Once you close above this, it is a candlestick structure low, but it is not a valid low because we're trending up. It is not a structural low. It's not a valid low. It's nothing, okay? So because of that, we're ignoring these closures. When we're trending up, we're not looking for a closure above a low, right? We're not looking in a trend. We're not looking in a trend up. We're not looking for a closure above the low candle, right? We're looking for a closure above the high, and then that makes this a low. And that is how you identify a swing, okay? That's how you identify a swing. Now, I didn't cherry pick this, all right? Honestly, I didn't cherry pick this, but magically come into the swing, make a little double bottom, and then go up, right? Why did it sweep, this out? Why did it sweep this out right here? Why did price come below this low, right? Oh, well, it closed above this black candle, so I thought that this was a low, and I thought that we could use this as structure to continue. I watched Photon. Well, Photon was fucking wrong, okay? Pardon my French. All of them, if they're not teaching it this way, this is objective, this is market structure. How it works is you need to form a valid high, right? And this is just the beginner, okay? There's going to be another lesson on how to identify swings in a more advanced way, and that's going to have to do with looking one time frame down and identifying a valid flip down followed by a valid flip up, okay? And that's going to be a couple lessons after this because it's the good stuff. It's my personal touch to the market, the edge that I found that I'm able to share profitable trade alerts by using, and be able to grow my live account, take payouts on my funded accounts because I have a different way of seeing structure in a more detailed format. But for now, this is the first thing that you need to learn. Very important. So let's look for the next series. Let's look for the next swing. So we're coming up and we go to this big bullish candle here, right? When we form this big bullish candle, notice how magically we never go and close below it. And we don't go close above it until we push higher. By the time that we push higher, we have not yet formed a low or a high. So because we have not formed a high, going and closing above this means absolutely nothing. This was not a high and this is not a low. This is all non-structural. It is all liable to get run out and swept. You guys asked about how do I identify these levels. Magma, you told us that we were going to go long at 633 today. And wow, look, where's 633? Right here? Magic, right? Because the Mark II also uses the concepts of non-structural lows typically. All right? What is this? Is this where my example is? No, that's later. We'll get into that in a second. So up here, or remember the example that I talked about where I said, hey, long at 140, long at 440. Those are non-structural lows because I know market structure. And you are going to know market structure too, and you're going to be able to think like me. That's why it's called the Magma mindset. So we have a swing up, right? Now we're looking for a high. You don't need to be worried about all the complexities. Market structure is so simple, and that's what makes people fail at it, okay? Market structure is almost too simple. Market structure, sorry, I had a verbal typo. I don't know why I'm speaking poorly. Anyways, we're just looking for a high right now. Using candlestick structure from the video prior, we're looking for a high. So did we get a high here? No, we did not close below. So we wick up, but we never close above until here. Once we do close above, right? We have one candle up here. We have another candle with a body slightly higher. So we're going to go ahead once we close below this and mark this out as our high. Boom, we have a high. Now, after we have a high, we're looking for one of two things. We're looking for price to go and close above this high, which will establish a valid structural protected low, or we're looking for price to go from that high and go close below this protected low. And that is what makes a bearish market structure flip. But we're going to get into that. You guys might look at this and think, well, this is an MSS or bearish market structure flip. That's why you're getting cooked. And it's okay. I'm not making fun of you. I'm here to help. So right here, what does happen, not hypothetically, but what does happen is we swing up because we have a valid high. And when we go close above this, we now have a valid structural low. We have a structural high, a structural low, an external high, a protected low, an external high, a protected low. Okay, now again, look at this, an external high and a protected low. Why? Because we're looking for a high now. How do you identify a high? Go watch the video before this one. Boom, we have a high right here. Why? Because we close below this highest bullish candle. Okay, so we close below the range, the entire body and wick with body closure underneath the highest bullish bodied candle. Okay, now once we go close above this, we don't have to look at the candlestick structure. I'm not paying attention to. Notice how I am not marking out the top of this candle. I don't care. Notice how I did not mark out the top of this candle. If I had marked out the top of that candle and thought, okay, here's a low, so here's a high, and then, oh, we went lower, so it's a lower low, let me try to short it, I would have gotten destroyed. That's not how market structure works at all. How market structure works is it's only a low once you go close above the high. So now we have, yet again, another structural swing on the 2 hour. Boom, right there, another structural swing. So I have 1, 2, 3 in a row right there. So let's continue to draw it with our path tool as well. This is how you're going to keep market structure on your chart. You can do the, I don't know who's calling me. Sorry, 1 second. Let me just turn this off. You can use, oh, you know what? I know who that was. Hang on one sec, guys. Sorry, that was the AC and furnace guys. Are coming to install an AC and replace my furnace next week. Anyways, back to it. So we have another swing right here. 1, 2, 3. What were we doing? We were counting out our, not counting, but just marking our swings with the path tool. So we're going to leave that there for now, right? High, low, high, low, high, low. Let's look in here. Now we're looking for a high, right? Why are we looking for a high? Because the last thing we got was a protected low. So we're looking for an external high using candlestick structure from the previous video. I'm going to keep on saying the same thing. All right. So does this candle get closed below? Obviously not. Does this candle? No. This candle goes higher. Does it? No. 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 Boom. Right here. We already have, spoiler alert, I already have these marked out. So let's just go ahead and get rid of them and start from scratch. Once we close below this, that validates a pullback. That makes it an external high. This is a structural external high, meaning anything that happens after the lowest point that the price travels to before going and crossing above this becomes our structural low, and that is this. I don't care if it's bullish. I don't care if it's bearish. I don't care if it's gotten closed above yet, right? It will have gotten closed above, obviously, if it goes above this, but that's a swing right there, plain and simple. All right. Now over here, let's look and see. This is a little bit of a complex example, like I showed you earlier, right? So over here, we have a structural high. And this is an external high, right? This goes above this with body, above this candle. Or let's zoom in here. We go above this with body. So we're looking for closure below this candle. Once we get closure below that candle, go ahead and marking out our high. Right now, what happens when we form a low and then we go and take that high with a wick, but we do not successfully close above it? Are we still considering this to be a structural protected low yet? No, we're not. Okay, we're not considering this a structural protected low yet because we haven't gone and closed above the high. That's the rule. Don't try to ever bend the rule. That's the rule. There are going to be some times, and I'm going to get into this in psychology. I don't want to go on a tangent, so I'm going to keep this really short. There are going to be many times when you see and you think you can outsmart market structure. You think, I can outsmart market structure. I'm a smart guy. Magma's not as smart as me. Maybe I am, maybe I'm not. I don't try to outsmart market structure anymore because the one time that I'm right does not equal the 5 times that I'm wrong. And if you're playing the odds in a random market where a setup will occasionally be fruitful for you, if you follow your rules, you can't afford those 5 losses because you were trying to outsmart market structure and you failed. Okay? So we just follow these rules, but we're going to talk about that in psychology. Just forget about it. So as far as marking my high out goes, right, because we've extended this range, in general, I prefer that we can actually go close above this, but technically, according to the original teachings, you would need to go close above this. That one's kind of mixed. I'll just leave it at going and closing above this at least. But obviously, when you have a manipulation up like this, then you need to start to reassess the situation and be a little bit more careful with how you're going to enter a trade, what you're going to look for a trade, because obviously something a little bit extracurricular is going on in the market that isn't just smooth trending market structure, right? But for the sake of closure above this, we're going with price closing above. Hang on one sec, guys. Okay, sorry about that again. That was a work call. Mortgage client. So now we're going to go ahead and finish up or add to our path tool drawing for our swings. I'm going to go ahead and cover this. Wick. And a low, and then up here we go higher, Why is this market structure? Because we have just closed underneath this highest bullish candle after closing above the previous external high. So that makes this a structural low, protected low, and this a external high or a structural high. So now let's talk about flips. This is an example of a flip. We're actually going to get to see two examples of flips. Flip up or flip down and then flip back up. So for the flip down is when we close below our protected low. So when you close below a protected low, two things happen. One, obviously you have a bearish market structure shift according to real market structure. And two, you are now looking for lows as your external factor rather than highs. So instead of looking for a external high and a protected low, we're now looking for external lows and protected highs. So let's go ahead and mark out the flip down to the first low that we get, our external low. As soon as we flip, we're immediately now looking for external lows. So we come down, make our flip down, and now this swing right here turns from a swing to a flip. Boom, just like that. Now instead of this being a bullish swing, this is a bearish flip. Now that we have a bearish flip, we're looking to identify external lows. So for instance, we get the closure and then immediately after, this candle ends up going and getting closed above. That makes it the external low because we're now using candlestick structure to identify lows and we're using market structure to identify highs. So we go ahead and mark out our low, and once we close below that, that makes a structural protected high. And that's right here, this guy. So drag it out to the side, and there you have it. That makes this a swing down, a bearish swing down right here. Okay, now the next thing that we're looking for, once again, is going to be a low. So it looks like, if we're using candlestick structure correctly, that the low we're trying to identify so far is going to be here. And we extend wicks out past, but we extend this wick out past, and then we attempt to close above here. We're not looking for a close above this anyways. We're looking for price to come close below this bearish body candle. When it does come close below this bearish body candle, like that, we can go ahead and start to look for a closure above this candle, and then we go a little bit lower, and now we're looking for closure above this candle. Once we confirm that low right there, we'll go ahead and cover our wick out. So now we know, right? Now we know for certain we have a protected high and we have a external low. Both of them are part of structure. One of them is protected, one of them is not. So from there, we're looking to see, are we going to go up and then come close below this low, making another protected high and continuing our bearish structure swings down? Or are we going to go close above the protected high first? So are we going to go close below the external low and continue our swings, make a new protected high? Or are we going to go close above this protected high? It looks like what we do, instead of going lower, is we go close above this. So this swing down turns into a flip up right there. Boom, just like that. Now here's a good nuance, something that you guys can practice because I think it's helpful. When you see price wicking out above like this, again, before making that closure, again, I just continue my box, right? So my validation point is here, okay? My validation point for the flip is here, but I'm gonna drag my box up to here. All the wicks that happen before we go close above this protected high, I'm gonna cover with my box. And I'm gonna use that as my structural zone that I drag out to the right, okay? So that doesn't mean that I'm covering this wick with it, because this wick happened after, okay? This wick right here happened after this closure of this candle. So what I am looking for covering is just gonna be covering this wick here because it happened before we closed out and confirmed this flip up. One sec. Yeah, the mortgage work is just really getting at me today. Okay. So we have a flip up here. After our flip up, we're going to go ahead and look for a confirmation of a low or of a high. So let's continue and find our high. No. 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 Here's one. Can identify this as a high, and remember we're in bullish market structure, right? We're in bullish market structure, so the next time that we're gonna mark out anything is either if we go all the way down and close below this flip low, this flip up low, or if we go and close above this external high. We go close above the external high, so now we have another swing. And prior to closing above it, we have this little tiny wick here. I'm going to go ahead and cover that wick, just a hair. And let's continue our path tool. That's a good habit to practice, marking this out over and over again. 1, 2, right? And now let's look for some more structure. So next thing we need to find again is a high. This is not a high, 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 not a high. Go back to the candlestick structure video. This is a high right here because we closed below our highest bodied bullish candle, okay? But I'm gonna go ahead and just cover my wick. No point in not covering that wick out. Now, as far as when we consider a swing up, again, we're gonna go with this high for closure, but we're gonna draw our box covering the entire thing. It's like a common sense sort of thing right there, though it is objective. So again, we have a low, a high, a low, and now we're looking for a high. Let's see if we can find a high real easy without using our tool, okay? Once we go close above this black line, we're looking for one of these bullish candles to get closed below. Bullish candle getting closed below, no, 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 no. This one does. So we'll go ahead and cover this out. Now, again, here's another great example of the flip, okay? And this is the last example of the flip I'll go over, and then we'll end this one off. And if you guys have any more questions about this, I mean, market structure is pretty simple. It's just about external highs and protected lows in bullish structure, external lows and protected highs in bearish structure. And flips are constituted by when you close, like a bear flip would be if you close below a protected low. A bull flip would be if you close above a protected high. So when we are looking, the next thing we're looking for here, again, just to reiterate one more time before we end, what we're looking for here is either for us to go low and then travel above this high with closure, or we're looking to see us go and close below this protected low. When we go close below the protected low, that makes this a flip. And now we are looking for a low followed by a protected high, or we're looking for price to come close up above this. And in this example, it actually looks like we never get, if you want to consider this one, you can. We're looking for a low, we barely close above this. Remember in candlestick structure, I said that if it closes thin enough to where you have to zoom in, you might not want to consider it. So that could be an instance there, but do some research on that for yourself and back testing. Find what's comfortable for you as far as that rule about candlestick structure and how many ticks you want to see it go close above goes. For me, I don't really consider this one, especially because this candle doesn't have a wick on top of it. This black candle doesn't have a wick on top of it. I don't really like the idea of this being counted as a closure. So for me, this whole thing just becomes one big flip up. And this is how I would personally mark structure out. Because if we're between an external low right here and a protected high, then everything inside means absolutely nothing. And we go all the way up and we make a high and then a low and we continue our trend up. And then we flip down and we flip back up, and that makes fake flip zones, which we're going to go over in the next video. So watch this a couple times. I only made it 30 minutes long, so you should be able to get through, sit down for a 2-hour study session, get through this in candlestick structure twice in a row, and come back to it whenever you need a touch up on structure. But either way, I'm going to be giving my daily top-down analysis until you finally understand. Any questions, just go ahead and send them in the premium chat. And I'll see you guys in the next one. Good luck.